Okay, so the next company on this list is Robinhood. Now, Robinhood stock has basically fallen since the IPO around $38 per share, which unfortunately is where I bought and recommended buying the stock. Robinhood reported earnings on the 27th, and they reported losing 49 cents per share versus 42 expected. Revenue came in short too, with only 362 million versus 371 million expected. They also saw monthly active users decline from 19.9 million to 17.3 million. So this really wasn't a great earnings report. On top of all that, the company's outlook for the first quarter of 2022 came in much lower than expected. Robinhood is expecting to take in around 370 million in revenue versus the 447 million that analysts had been projecting. So on top of the poor earnings, guidance wasn't great as well. Now, when we look at the full year quarterly earnings report, we can see that the last quarter saw a much smaller loss than what we've seen over the past year from the company. And also during the call, Robinhood says that they expect to become profitable during 2022. Now, when we look at their revenue and net income, we can see the loss they produced over the last year so far is pretty shocking. It's almost double what they took in revenue. So if they were able to turn a profit this year, I would see that as pretty surprising. Now, unfortunately, it is also very annoying that I can't get access to Robinhood's quarterly report because for some reason it's still not uploaded. But when we look over at Robinhood's current forecast going forward, the expectation is for Robinhood to continue growing from 1.7 billion in revenue and a $3.2 billion loss to 3.4 billion in revenue and 335 million in profits by 2024. Now, I do think that Robinhood is going to face a lot of headwinds over the next couple of years. The first big one is while a lot of people joined the stock market in March of 2022 and January of 2021, it does seem like a little bit of that interest is declining. When you look at this Google Trends chart, you can actually see the pretty big spikes in March 2020 and January 2021. Now, there does seem to be a little bit of a jump recently, and that probably has to do with a lot of the volatility we've seen over the past month. But we've also seen a lot of the fun go away with a lot of the meme stocks and the disruptor growth companies that saw these crazy rises during 2022 and 2021. They all seem like they've lost a lot of momentum, and I actually think that drives a lot of the retail investors away from the market who otherwise would be using Robinhood. When the market isn't fun for them, they no longer want to play the game. Now, looking at the current revenue forecast for Robinhood, it's obviously still very high. Personally, I think to value them, we're going to have to use a generic growth rate of 20 to 25% growth. And since they aren't currently profitable yet, we have to estimate their profit margins. So if we go a little lower than the industry average, I think we could reasonably expect Robinhood to have a profit margin between 10 to 15%. So 20% growth and a 10% profit margin gives us a fair price to sales value of 5, and a 25% growth rate with 15% profit margin gives us a fair price to sales ratio of 12. So when we look at this valuation charted out, we can actually see that Robinhood stock is still pretty cheap. But keep in mind that this entire valuation still depends on them executing the current forecasts. Now, for me, at this point, I'd rather see how they do a little more going forward, because if they stop losing customers and start to return to growth, this does seem like a pretty cheap stock. But if they can't get that customer base back, then I don't think that the company is worth investing in right now. So Robinhood, I would say, is a hold right now. Now, that clip was a part of a much larger video that I did covering about 6 stocks, so if you want to check out the full thing, make sure you check it out right over here. And as always, thanks for watching.